So, Andre, before we start talking about your company, Vantage Corp, can you tell us a little bit about your background and how you ended up at Vantage Corp?
I'm a bit of a complex animal. I'm half Indian, half Japanese. I was born in India. I grew up in Hong Kong, went to university in Tokyo. I learned Chinese in Beijing. And I spent about a year and a half in China before I moved to Singapore. And when I was in Singapore, I was looking for a job, and then I stumbled across a newspaper ad, which was for shipbroking. My dad's in shipping as well, so that's why I ended up applying for the ad as a shipbroker. I got it, and from 22 years old or 23 years old until now, I've been doing shipbroking ever since, with the same group of guys that formed Vantage.
Okay, so, and what exactly does Vantage Corp do? How do you operate? What's your business model?
So I don't know how much you know about shipbroking, but shipbroking, it has many different spheres across different commodities, different types of vessels, etc. For Vantage Corp, we particularly focus on the movement of liquid in bulk. So this is on the tanker market. For example, it goes from the crude oil all the way down to the vegetable oils and the chemicals, etc. So, for example, a very simple example would be Shell or ExxonMobil or whichever company that you think is you pump your gasoline in for the petrol stations. We are the guys who actually broke the deals, which take it from a oil-producing country to your doorstep, to the port that is near your house. So I think Rio doesn't have a port, but there are quite a few like nearby. And we also do shipments on clean in the past, but now Brazil's become an exporter, so it's become a different thing.
So you mainly work with tankers, right?
Correct. It's not only me operating the company. Right now, we have over 70 people. Actually 65 people now that are basically spanning from Singapore to Dubai, covering the whole tanker segment, which is dirty petroleum products, crude oil, clean petroleum products, chemicals, vegetable oils, etc.
Okay. And how diversified are you in that sense?
So think about it on a daily basis. We are very well diversified across the whole tanker segment. We have so not one single company or not one single contributor to our net profit or gross revenue accounts for more than 10% of our total gross revenue. We actually talk to more than 260 entities, and these are not entities which are like one individual. These are like oil companies like Chevron, BP, Shell, etc.
Mm-hmm.
And if you're talking about do we only focus on the big boys? No, we also deal with the oil traders such as Vitol, Trafigura, and also the national oil companies such as Petrobras, which you guys should know, and Petronas and Thai Oil, Idemitsu, etc.
And today you operate out of Singapore, right?
Yeah, so we started Vantage in 2012, and that was the starting point of Vantage. Of course, all of us were professional brokers way before that, since 2002, 2003. But Vantage as itself started off in 2012. And from there, we've grown from maybe 17 people to now it's like 50, 60, 70. It's hard to keep track as we keep growing.
Mm-hmm. Do you have offices in other parts of the world? Do you have plans to expand further? If I'm not mistaken, the capital that came from the IPO, its objective was to fund the expansion.
Yeah, I mean, before we actually, we recently executed the IPO. The IPO was executed in June. However, no IPO just magically appears. It took a lot of work to get there, which was about a year and a half plus to actually achieve it. And before that, we actually decided that if we stayed in Singapore, we would probably be very successful in Singapore alone, but we would never actually have the longevity of a global scale. So this is why the motivation of having the IPO in the first place was not so much about cashing out, but to get brand awareness across the globe and make sure that we have at least a war chest to expand globally. So this is where we actually started our expansion process into Dubai before the IPO. And this is why you see Vantage existing in Singapore, plus in Dubai. And currently, I'm working out of Dubai. I was tasked with setting it up, and we've just signed an MOU to expand it to China. So we are going to be getting our feet into the ground in China early next year. So Shanghai, Hong Kong. And we also took over the company, which had a presence in Singapore as well, and they'll merge into the Singapore office.
Okay, so your main operation is in Singapore. However, you are expanding next year, for example, to Shanghai and Hong Kong.
And we already exist in Dubai as well.
Dubai, okay. And will the offices in Hong Kong and Shanghai be generating revenues in day one?
Yes.
Okay. And why is the Chinese market so important for you?
So, I mean, you just have to look at scale. For a simple reason, Chinese have a 1 billion population. Another big market would be India. But I mean, Singapore and Dubai already cover India. But China being a very Chinese and it's a very difficult market to break into. So we need to have a physical presence on the ground there. So this is why we thought it was the best logical framework to actually open and establish, buy established brokerage firm there, so that at least they have that local knowledge already pre-existing. And then from there, we grow and build into it rather than trying to set it up by ourselves.
And what potential do you see in this Chinese operation?
So I think the future of the tanker space will be driven quite a large part by the chemicals market. And China is going to be a very big demand center and also export center. It's like both sides of it on the chemicals market, as well as on the shipbuilding. If you actually look at, I think it's something like 40% of all ships in the world are being built in China. So if you actually go into the China market and you get close to the shipbuilding side of it, you need a Shanghai office and eventually growing that division, so that the communication, even if you're dealing predominantly out of Singapore or Dubai or West, you have that access point towards the Chinese market.
Okay. Now, in terms of revenue, what potential can this Chinese operation bring? I mean, because Vantage Corp today is showing, if I'm not mistaken, 18 million over the last 12 months in revenue.
So in
Something
order
like
to build an empire, you don't look at one little brick and ask how much. So for me, I always look at it as yes, it is generating revenue, but what it's generating right now is not necessarily what it's going to do in the future. If I was buying it for just what it's generating now, then I don't think I'm a good businessman. So I'm looking at the future growth of it. However, due to the fact that all the numbers and also the completion of the MOU is not fully signed, I can't actually disclose the future projections of what's going to happen. Anyway, that's probably going to be addressed during our earnings call on early January, mid-January, around there.
Well, I will try to be there so I can ask that. But I can assume that your entrance in the Chinese market should bring a lot of potential. And maybe this entrance in the Chinese market could take Vantage Corp to maybe in the future 50 million in revenue. I don't know. What I'm trying to assess here is how much Vantage Corp can grow considering all the offices it has around the world. I mean, could this be a $50 million company, a $100 million company? Could you comment a little bit about that? I don't know if you can say anything about that, but just to give us a little color on what Vantage can become.
So, I mean, okay, think of it very, very logically. I cannot give you future projections, but our goals and ambitions is to expand globally. If an entity in Singapore, which has been operating for 12 years and has been consistently growing in revenue, and right now holds about $18 to $20 million in revenue. If we actually have global offices, they might not be of equal size, but have good, capable, and compatible brokers. If one office is making 20 million, even if you take 50% of that, your revenue will grow. Mm-hmm. So each geographical location is different. Each industry that you're tackling, each segment you're tackling is going to be different. So you cannot be like a one-for-one equal exchange. And nothing is built in one day. It takes time. But we are in this business for more than 20 years. We know what we're doing. So hypothetically, if Singapore is generating, say, 20 million, the logical assumption would be if you actually open a London office, which is a major center, you would be aiming to achieve that. Whether you hit that in one day or you're going to take 1-2 years to reach that. But that would be the general trajectory towards it. But our goal is to actually expand globally. So it doesn't mean we're going to build the whole castle in one day, but we'll find opportunities at the right price.
And you were planning also to have an office in the US, right?
Yes, that's always been one of, just geographically, the oil hubs of the tanker space, oil hubs. One is Singapore. Dubai is emerging as one. Geneva is another. London is another. And Houston is another. Then slowly, as Brazil becomes bigger, South America is going to become a big market. And you might see even Rio becoming a very good possibility.
You really see that?
It may take another 5 years to 7 years. But right now, it's the wild, wild west in South America. Everybody's trying to get in, but no one actually knows how to address the market. You might have 1-2 brokers which are already entrenched there. But other than that, yeah, there's a lot of money being thrown at it. But I think it's still a bit too early to do so, because we don't know exactly whether the recession is going to be coming in the next 3 to 5 years or not. So I'd rather tread a bit more cautiously.
Of course.
I don't know that much about the Brazilian market, for example. But I do know Asia really well. So this is why we rather boats to Asia first, get our this part of the jigsaw puzzle kind of well cemented, and then break west.
And your revenue is heavily linked to tanker freight rates, right? Of course.
Yeah.
Do you see tanker rates going up? What are you seeing in that front? And I ask that because I know that tanker rates and VLCC rates, if I'm not mistaken, are through the roof, right? And I know that because I was invested in Frontline and DHT. However, I sold my shares actually this week because I don't know. I mean, could tanker rates could still go up? And is that important for you?
Okay, yes and no. So a shipbroker does not take position on asset. We don't really look at asset valuations of the tanker itself. Something like DHT or Frontline or Seaways, for example, the assets on book, which is the ships itself, if they increase in value, then the market valuation of the asset itself goes up. Now, of course, if your tanker rates go up, they will make more revenue and net profit goes up. So, of course, their stock will perform a lot better. For us, we make money out of the freight that the ship owner is making. So if the ship owner is making more money, theoretically, we make more money because it's a percentage, right? So for me, I would say right now, partially seasonal, partially momentum-driven rate hike. So you already started seeing it go into the dirty market, which is the VLCC spike first. Then the Suezmaxes pulled up, Aframaxes pulled up, and now you're seeing a delayed effect of about 45 days. Your clean market, which is I think your Scorpio and all these companies will start earning more money because the clean rates are going up. So it's just kind of seasonal because you're coming into winter season, and once you go into the winter season, then your gas oil jet should be actually increasing in volume.
But tanker rates going up, that's also good for you, right? I mean, if tanker stocks are going up because the tanker freight rate is going up, I mean, it should be reasonable to expect that Vantage Corp should be also going up, right?
Yeah, I mean, it's if the owners are making more money, we'll definitely make more money, right? But of course, it depends on the segment, how much exposure we have to a particular segment. So if you're saying, hypothetically, you say VLCC in Brazil is going up. We have zero exposure to the VLCC Brazilian market. So it really you can't take the whole, because the world is so big. You can't take the whole world. Whereas a ship owner is covering the whole world. We are covering east of Suez. So we are Eastern centric. And this is why we need to actually start covering the whole world. And that's why we're trying to expand west. So we get the diversification of risk. So we get a bit of the whole pie, so to speak, like what the ship owners are doing.
Now, it's interesting because while tanker stocks are skyrocketing, Vantage Corp went down like 90% in a day.
Yep.
So for me, there's a huge asymmetry there. What I want to ask is, do you know why that drop happened? Did anything change in the company? Do we have any reasons to worry?
Look, when it happened, I was too busy with work. I was actually trading at that same time. So when I actually heard about it, I thought it was just like this normal 20 cent, 30 cent drop. Then it goes back up, down. But when I heard it dropped like 3 hours, something like $6 or something like that, I was in shock. There was no change in our company. We're still all the people are employed, all the salaries are getting paid, everybody's making money. The company's still making money. So
Everything is in place?
yeah, everything's in place. So it came more of a shock to us. That's why we issued an announcement almost immediately saying there's no material change with our company, because there is none. But of course, we did IPO a very small percentage of our company. We only IPO'd 13% of our company. So if you float a very small percentage, the number of shares that exist in the total float is like, say, 8 million, 9 million shares, very minimal. And with that, a small change in the shareholder, like if, say, 30% wants to get out of the stock, you would have a bigger fluctuation. I mean, that's the only way I can look at it, because just I was looking at it in that one day, something like 14 million shares got traded in one day, which is more than the total stock that's available in Vantage. So
that's crazy.
So I think it's not fundamentally driven, but there was maybe it was something to do with the tariffs, maybe it was something to do with the crypto crash. I have no idea. But it's definitely nothing to do with the stability and the health of our company.
Okay, great. And what about your margins? You've been showing excellent margins. Should we expect those to be maintained? Could you talk a little about that?
So, of course, we just recently IPO'd, so we still have to get through the IPO expenses that will probably come up in on like financial closing. But after that, yeah, I think it should be fairly consistent. In the 12 years of running the company together with my friends, together with my partners, we've always been profitable. So I don't think that's going to change, because we run a fairly tight shop. And if we wanted to run away, we wouldn't have gone IPO. We would have gone and sold it to private investors, right? But we believe in the job in this business, and we do believe in the growth of our company.
And what about cash generation? Because if I'm not mistaken, you are showing 4 million in operating profit, while you were showing around 2 million in operating cash flow. So the cash margin is smaller than the operating margin. Should we expect the operating margin, the cash margin, to increase?
It takes time to rebuild after you start buying, because we're buying companies as well. So you can't take money out to buy a company and expect to immediately get an increase in cash.
Of course,
so,
of course.
The whole thing is you cannot invest for free. You have to commit some amount of money. And this is where, to grow the business, nothing is free. We always have to deploy capital. And having capital just sitting in the accounts doing nothing is also wrong, because that's not really good utility of cash for our investors. So for me, what I always try to do is make sure that we have enough operating cash flow, and we always run it on 6 months operating cash flow. And because usually we do 80 to 90% of the recovery of our commissions, which is like we do daily transactions with clients. Within 3 months, we recover back 80% of the money. 20% might drag a little bit. So this way, we are always going to be net cash flow positive, if you look at it that way.
And how much of the company do you and your partners own?
So there are 5 partners which initially started up Vantage. Well, 5 of us are equal. Of course, we do, and all of us have very different personalities, and that's what makes it great. So different people actually control different spheres of the business. But all five of us actually control 13% of the company each. So the majority holding of the company, which is about 62-65%, something like that, is controlled by the five people.
So if I buy some Vantage Corp shares, I'm with you.
Yeah, definitely. I mean,
Okay.
I'm not going to go anywhere, unfortunately. I'm tied to this business.
Great. No, that's great to know. That gives us shareholders and investors more confidence, right? Because I know that I'm in the same boat as you. Okay, so let me see if I have another question. Does the company have any debt?
No.
No. Okay. Oh, and about the cash flow margin, you said that you're planning to operate always in a positive cash flow basis, right? So for investors, we shouldn't worry about the company to start burning cash and to be on the negative.
I mean,
Of course, that can happen, but
I mean, I can't
happen.
I can't guarantee anything, because I have gone through 3 recessions in 20 years. So anything is possible, but even in the hard times, we cut down, we lean down, meaning everybody takes like maybe a haircut on their salaries or bonuses or whatever it is. So we've gone through bad times, and that's what any company will go through. Now, if you say, am I going to take on debt? If it's cheap enough, maybe. If someone offers me $10 million at 2%, okay, I'll take it, right? But
Yes.
I'm not going to refuse it. But if you're asking me, am I going to do it without a reason? No. I need utility for that money, and I have to be able to generate more than the debt financing service like cost. So if I don't believe I can generate more, then I won't take it. No need to complicate a simple thing, right?
Right, of course. So, Andre, I'm out of questions. Do you have something that you think is relevant for us investors to know about Vantage Corp that we haven't covered yet?
Oh no, I think what you pointed out about the share drop and the current trading price of the stock. My personal view is we are undervalued. That's why just recently I came out with a stock buyback of $1 million, just to prove that, yeah, I believe in my company. Our company, because we've been in it for 12, 13 years. We're not going to shut down tomorrow, and I don't think we'll shut down even if a recession does hit. We'll keep on operating. So I think the share value is partially driven by fear and lack of understanding of what we do. We're a healthy business, and I think it's going. I think next year people will see. I think you just need to go through one full earnings cycle, and then people will start to believe probably mid next year and next year when people see the trajectory of what we are doing. Because I don't really look at the stock price every day. I'm too busy actually running the company.
Great. So, okay, Andre, it was a pleasure to talk to you again. And
All right.
take care. Bye-bye.
Bye.